Are you a new entrepreneur overwhelmed by taxes? Well, you're not alone. Today, we're going to talk about the 5 most common tax mistakes that new entrepreneurs make and how you can avoid them. Hello to all of my returning viewers and subscribers. And if this is your first time here, welcome. I'm Coach Ktasha. And for over 19 years, I've had the privilege of helping entrepreneurs take control of their taxes and grow their businesses. My goal is to share insights that can save you time, money, and make managing your business a whole lot easier. Now, mistake number one is not keeping proper records, right? Many new entrepreneurs don't realize the importance of keeping accurate records from day one. Honestly, right? Usually you just begin spending money for the business and you're not tracking a lot of those early expenses. Now, did you even know that the IRS allows a tax write-off of up to $5,000 to start up your business? So if you're not keeping track from day one, you're going to miss out on all of this, okay? Another common issue is using personal accounts for business expenses, which makes tracking income and expenses extremely difficult. Now, when you fail to keep track of even small day-to-day expenses, it can lead to missed deductions and you might lose money at tax time. And without good records, it's challenging to prove business expenses if you're ever audited. So here's what you want to do, okay? You want to separate personal and business finances by opening up a business bank account and using it for all business related transactions. Now, make sure you check the link in my description box because I included a link for you to an online bank that I highly recommend. You should also be using DIY accounting software like QuickBooks or Wave, or even honestly like a simple spreadsheet. To actually help you out, I created a tax deduction tracker so you can easily track your income and expenses, and it's on Google Sheets, all right? And so I included an explainer video so you don't have to like feel intimidated and try to figure this whole thing out. And I even provided you with a long list of common tax deductions. So make sure you check out that link in my description box as well. Now, my next tip is to set a weekly or monthly schedule to update your records and to help ensure that nothing is forgotten. You want to be sure you're saving your receipts, and you can do this digitally or physically, like whatever works for you. You just want to basically maintain proof of all of your expenses, okay? Now, mistake number two is misunderstanding deductions, right? Many new entrepreneurs often miss out on deductions that they're eligible for, like home office, vehicle expenses, equipment purchases, and so much more, simply because they misunderstand deductions. Many are afraid to even claim deductions that they are literally entitled to, right? Simply because they fear audits or penalties. Now, don't get me wrong, if you claim incorrect deductions and you get audited, that's when, it's going to lead to trouble. Confusion about what qualifies as a business deduction is common, especially with mixed use items like phones or computers, okay? Now, I highly recommend that you educate yourself on common deductions, especially specific deductions related to your industry. This can help you to drastically reduce your taxable income. Be sure to keep track of business use versus personal use percentages for mixed items like phones, internet, and many others, okay? And as I mentioned, you want to use tools like accounting software or spreadsheets because you want to be able to record these eligible expenses throughout the year. It's also a good idea for you to consult with a tax professional who understands your industry and can give you guidance. Now, be sure to check out a previous video I did on how to help you find the perfect tax professional, and the link will be in my description box. Before I actually forget, I also want to tell you about an ebook I wrote called Tax Essentials for Entrepreneurs, which is a comprehensive guide that will help you gain a better understanding. Okay, very easy to read. I wrote it relatable, so check that out. Okay. And it really helps, just teach you all about how taxes work for entrepreneurs. And I also teach you about some tax strategies and so much more. Okay. Mistake number 3 is failing to pay estimated taxes. Now, many entrepreneurs don't even realize they need to pay estimated taxes. When we are self-employed, there is no employer withholding our taxes. So it is our responsibility to, like withhold our own taxes, which will help help you avoid tax penalties and large unexpected bills when you do file. Now, the IRS does require estimated taxes if you expect to owe at least $1,000 in taxes when you file. And if you don't set aside money for taxes regularly, you're going to find yourself potentially short on funds when these payments are due. So you also don't want to miss quarterly deadlines because this can result in costly penalties, which add unnecessary stress. Be sure to calculate your estimated tax payments early by maybe like using last year's tax return as a guide, or you can even consult with a tax professional. Okay, make sure you're setting money aside for taxes each month or even each week or literally even each transaction, okay, as you're earning your money. All right, this is going to help you avoid large end of year burdens. Okay, and if you're not sure how much to set aside, consult with a tax professional who can help give you some guidelines based on your unique circumstances. You can also use a rough estimate like 20%, okay? Also use a tax calendar to mark the quarterly payment deadlines so you're never caught off guard, and put these dates in your calendar with reminders, okay? Mistake number 4 is not separating personal and business finances. Mixing personal and business expenses is a common mistake among new entrepreneurs, especially if they're sole proprietors, okay? This is called commingling funds. Now, without separate accounts, it's hard to track which expenses are deductible, which can lead to all sorts of confusion and mistakes. Commingling funds can cause trouble if you're audited by the IRS or your state tax agency and you have to prove, which expenses are business related. This is why it's crucial to open up that business bank account and even a business credit card, okay, to keep these personal and business expenses completely separate. Also, pay yourself a regular salary from your business instead of just like dipping into business funds, because I know it feels like your money, but the earnings actually belong to the business. And I think a lot of people don't understand that. And you should let your business pay you so that you can use that money, that the business pays you for your personal expenses. Okay. Now, mistake number 5 is waiting until the last minute to prepare for taxes. Many entrepreneurs procrastinate on tax preparation, leaving everything until tax season, which results in like a rushed and stressful process. Okay, when you're scrambling around at the last minute, you're going to miss out on important deductions and tax saving opportunities. That gets often overlooked. Filing late or filing with errors due to haste can lead to penalties or even a tax audit. Now, if you do need to file late, just make sure you file an extension. And you may even want to include like a $1,000 payment with the extension, okay? Incomplete records and unorganized financial documents make it difficult to file correctly and on time. So you honestly want to start preparing for taxes year-round by updating your financial records regularly, okay? Set aside that time, to organize yourself each week, each month, or whatever. Or even if you're going to outsource the task to a professional, So don't forget that was all I have for y'all today. Don't forget to subscribe if you want more tips like these to help your business grow and succeed. Bye for now, and I will see you at the corner of success.